Welcome to Bears in Exile. Today is Monday, August 1st, and it is time for the market overview. We'll be looking at the Dow, SPX, VIX, XOY, TNA, UUP, FXE, GLD, and SLV. So, we have been waiting for the NDEs to subside. We've been waiting for the debt resolution to come, and for the most part, it is here, finally. The House just passed a little while ago the debt package, which in my opinion was not very good, but there it is. What can you expect from politicians? Today in the Dow, wild swings. Unfortunately, I was in meetings most of the day and I missed out on most of it, but fascinating. You know, huge open, pretty good low, and we ended right in the middle. Not a spinning top, not a star, just a complete, almost pause in time. So very interesting, and you can see that we do have excessive separation in the short-term moving averages, breaking through the small bullish bar. Bullish bar is the bullish bar is collapsing. Had to look at it really quick there for a second. CCI ticking up, stochastic ticking up, RSI ticking up. Histogram still going down along with the MACD. So this is a supreme indecision candle, and very interesting. If we look at the SPX, we have exactly the same thing. We have a little bit of a larger body, but still a extremely strong indecision candle. We do have not so excessive separation in the short-term moving averages as they break through the flatline bar. This was very interesting. I called this out on the daily running thread. We had broken below the 200-day moving average, and fortunately they were able to rescue it. Well, fortunately or not fortunately, I guess depending upon your point of view, but they were able to rescue it before the close of the day. A close below the 200 would have been really bad looking, although the Dow has much farther to go before the 200 in comparison to the SPX. CCI ticking up, stochastic ticking up, RSI flat, histogram ticking down along with the MACD, and this still looks bearish, but it is attempting to shift gears. So something to be aware of, and it can go either way, but it is in the process of trying to shift gears. The VIX, big inverse hammer. We have a downtick. We have excessive separation. With this downtick, it gives us a target just above 21. So little ways to go down for that to resolve itself and fix this bubble. The bullish bar is continuing to form. Finally has some real definition to the separation, although it is not wide spacing yet. CCI ticking down, stochastic ticking down, RSI ticking down, even the histogram ticking down ever so slightly, and the MACD still pointing up. So certainly looks like it is poised for some sort of a reversal. It is unknown at this time what strength that will be, but certainly it looks like that would be more than possible. You can see on Friday we had this not quite a hammer, but outside of the upper Bollinger Band, a little cross, and that would make sense to me. XOI, yet another big indecision candle, not too far away from the 200-day moving average. It did kiss the lower Bollinger Band today. We still do not have complete crossover going through the bar. CCI right at the 100, stochastic trying to tick up, RSI right at neutral 50, histogram and MACD ticking down. So at this moment, I would say that odds are still with the bears, but in the longer term. But certainly, it is trying to shift gears. TNA. Right on, big ol' red candle, and it is below the 200-day moving average. We do have what looks to be excessive separation and wobble in the short-term moving averages. The flatline bar is trying to turn over and get some separation, but CCI ticking up, stochastic up, RSI neutral, MACD ticking down, and histogram ticking down. I did point out in the daily running thread today on the 60-minute, we have positive divergence on CCI. It wiped out the one that we had on the stochastic. We have it on the RSI, have it on the MACD. So we will be watching this, but certainly it is there. UUP, big green bar, bullish engulfing. We can see all the bubbliness in the short-term moving averages. A bearish bar has formed. All of the secondaries are ticking up. We still have the uptick, the uptick over here has not quite been met, and we have another uptick today, which was met intraday. So it is interesting, and if it is able to get back up to the bar, it'll be interesting to see if it has the power to put some damage on it. At this moment, it is certainly a question mark. Nothing clear about this, which is to be expected with the news being as it is. FXE, the euro, you can see that we had a downtick a few days ago that was met, had a downtick today that was met intraday. The price has gone through the bar. The short-term moving averages are converging, and possibly will break through it. We're not too far away from the lower price consensus level, just above 141, and everything is ticking down. So it would appear like the correlation between the dollar and the indexes are breaking down. We could use a little more information, but certainly it looks more than possible. GLD, our second VIX, yet another indecision candle. Got pushed down more than it got pushed up, as told by the tails. The short-term moving average is completely neutral, side tick, and everything is clicking down, and the MACD is barely clicking down. So we've been saying that this has been high, but with all the calls now for gold to go to 2,000, 1,900, 3,000, whatever you want to give it for a target price, maybe this is cheap, but we'll have to see, especially with the debt ceiling being done now. I would expect it to go down some. You have major price consensus just above 154, which is $3 below where it is now, and that would fix any kind of bubbliness that we have, which does make sense to me. The news just dominates. NDEs, they're no joke. SLV was having some strength, did have its downtick. It was met today, and which is pretty perfect. That would have been the third day, so downticks do work. Everything is ticking down, and I guess that's to be expected with the debt ceiling going the way that it is. And I'll just take a quick look and see if there's any divergence on the Dow. CCI we do, stochastic we do, RSI we do not, MACD histogram we do. So that would point for a bump up. SPX looking for divergence. CCI, yes we do. Stochastic, yes we do. And RSI we do not. Histogram we do. So there you have it. Shifting gears, and worry going out of the market a little bit, but still with the Moody's and S&P downgrade hanging on our heads, and the final vote for the debt ceiling, we're going to have to wait and see. There's just too much indecision for me. I am just waiting for a clear break. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you very much.